This first quarter is setting up to be pretty messy, I think.
This is a code red situation for Tesla. I mean, they are going through some dark days in China.
I would not want to be Elon Musk. I mean, obviously he's not missing a meal, but he's down $40 billion in stock. Tesla was down 12% today. They continue to drop their price.
I look at this and I say there's some fundamental flaws in the bull thesis, and it's egregiously overvalued.
All that and more. So let's get to it. Tesla stock finished the trading day on Thursday down about 2.25%. The trend is continuing after hours, down 0.25%, currently sitting at 175.10. Tesla did finish up for the week a little over 1%, but still down around 30% year to date. Let's check the temperature of the street as Q1 results rapidly approach.
Just a reaction to, obviously, this downward move that we've seen in Tesla. Not exactly a massive surprise given the trends that we had seen over the last several weeks. But how is Tesla set up now, not only in the current quarter, but looking ahead to the remainder of the year?
This first quarter is setting up to be pretty messy. I think everyone understands that there's seasonal weakness here in the first quarter. They've had some supply chain disruptions, in the European supply chain with the Red Sea. They also had this fire in Germany, that shut down the factory for a little bit, and the announcement that they're kind of trimming some of the production in China. And so I don't think anyone has any big expectations for production here. But what is at stake, I think, is where the margins shake out for the quarter and how that sets up for the balance of the year. And so as we're looking at this, we just trimmed numbers on the first quarter, just out of a bit of caution. But we're also seeing them recognize a certain amount of deferred revenue with the release of the version 12.3 on the FSD. We think they're going to recognize a reasonable amount of revenue there to support the margins. And so, net where we're at is we think there's a bit of a better than feared trade setting up here on the quarter, provided that the margins hold up as we get into the balance of the year.
For Colin and a lot of individuals, it's all about the margins. We already know the volumes will be low for Tesla. What curious minds would like to know is how this will impact the margin story. Are we going to go back into the 20% range? Or is Tesla going to suffer less growth and have their margins squeezed at the same time? For those that are investing in Tesla with short time horizons, I suppose that could prove disastrous. But as the stock price drops and I'm looking ahead at the future,
Tesla expected to report first quarter deliveries next week. Joining us now on why he's lowering his price target on the stock ahead of those numbers is Dan Ives, Wedbush Securities managing partner. I don't know, it just makes me smile a little bit, Dan. You could be lowering your numbers because the stock's at 175 and your target's 315. That'd be a good reason. We'll get all your other reasons, but that's a good start, I think. But it's a little bit odd. You're going down $15 to 300, and you're keeping an outperform rating. All this sounds sort of, I don't know, too little too late.
Yeah, look, I mean, it's obviously a great point. Look, we're bullish for Tesla on the other side.
Well, you must be, because you still have a $300 price target.
This challenging period.
What's that return from 180 to 300 is? So you're still looking for like a 70% return.
Yeah,
right?
and look, we've been here before. In other words, there's no doubt, and we call it out. I mean, this is a code red situation for Tesla. I mean, they are going through some dark days in China from a demand perspective. But Joe, I believe on the other side of this is a company, not just from an FSD perspective, but from volume that could start to get 2.5, 3 million vehicles per year as we go into the next few years. Our whole point here is you're in between two growth waves here. They clearly need to lay out a strategy for investors because this is going to be a rip the Band-Aid off delivery quarter next week, and there's no smoke and mirror about it. And I think right now for Musk, I kind of view it as a fork in the road period to handle the investors through this.
Code red! Code red! As Dan Ives dodges pointed questions, he's in fear of becoming a laughingstock. How dare you have a $300 price target and outperform rating when the stock is at $175 per share. Look, most of these analysts have a time horizon of 6 to 12 months. I believe in Dan's case, he's got a 12-month fair value estimate of now $300. In my bear case, I'm a little bit higher than that, right around $330 in the bear case. That's if they produce 1.7 million vehicles this year. That's my fair value estimate for what I believe they will be worth a decade's time from now. Regardless of what the market cap is today, it will not impede what Tesla's going to do in the future.
First quarter deliveries for Tesla, and we'll find out next week, but you expect it to be a nightmare quarter because of China and China demand.
Yeah, I mean, China, we originally had that up 3-4%. It's going to be down 3 to 4%. And the issue here, is just that Game of Thrones price war that's happened in China with EVs. It's hurt Tesla, and I think right now the problem is, do they continue to cut prices, or do they ultimately hold serve and focus on where demand could be? And I think as much as we talk about FSD and why we're long-term bullish, and I do believe we're sitting here a year and a half from now at $1 trillion plus market cap.
Yeah, so when we were up at 300 or 299, wherever it was, I get at that point, were you still worried about supply and you didn't see the demand issues coming?
Yeah, I think where we were dead wrong is underestimating just how bad China demand was going to be.
China demand.
So for us, when I look back, that's really what's caught us, I think, many by surprise in terms of just how quickly demands come off, but also with no adult in the room and with 2 disaster conference calls in a row, they haven't laid out guidance, they haven't given the strategy. You've had other noise in terms of the AI issues with Musk and obviously the Delaware comp issue, which is added to it. But I think that's the problem. They haven't laid out the strategy to where investors right now feel like they're blindfolded playing darts.
Do you have a price target in terms of 300, but do you think we're near a low here, depending on what happens next week?
I mean, I think right now a lot of the bad news is I mean, we wouldn't be bullish if I didn't think that this stock is
Why not put a buy on it then?
That is our highest rating.
Outperforms your highest rating?
Outperforming, it's on our top picks list, and I just view it as we've been through these white knuckle periods before over the years. This is another one now that we're hitting, and we're just calling it out, give out the strategy to what Musk needs to do in the conference call to get through some dark days ahead.
He doesn't really listen, though, to we've seen when you ask him about how do you feel about criticism, he doesn't, he's going to do what he thinks is right, and he's in a position to be able to do that.
No doubt, but I do think...
You said no adults in the room. You think he'll return to giving the street what it wants in these calls?
I'll go ahead and feel that. The street didn't get us to where we are today. Elon Musk and the brilliant team at Tesla has gotten us to where we are today and is going to guide us into the future. What the street thinks. The adults have never been in the room because the adults don't see Tesla as a technology company, a robotics company, an energy company. They see it as a run-of-the-mill automotive company and want it to behave as such. When Tesla has done anything but. When the stock price is high, everything's all sugar plums and rainbows. But experience a little turbulence and let's check the barometer of what's wrong. Nothing has changed. Tesla is handling adversity admirably, achieving feats not just in the automobile industry, everywhere, doing the impossible on a damn near yearly basis. But just like Dan Ives said, a year and a half from now, when Tesla is obviously $1 trillion company, there's obviously going to be some regret associated with this fear, uncertainty, and doubt right now.
What do you make of this Chinese strategy? I mean, you can sell cars at a loss, but you can't make up the profit by selling volume, right?
No, I mean, good to see it, but I have to tell you, it's a race to the bottom. I've been calling for this. You know, Fox News just did a montage on me that I've been calling since 2023 with 10 segments where they did this whole montage where I've been calling for an EV crash, and it's here. You know, the EV market has burned over $100 billion. Manufacturers are throwing money at this crazy concept that the Biden administration put out there. And the reality of it is it doesn't matter how low the prices go. We have another 20 to 30% that we could go down, but it doesn't matter how low they go. The demand is not there. The consumers don't want it. Hybrids are selling 4-to-1 over EVs.
Oh no, the demand is not there. Just the best-selling vehicle of 2023, damn near double the price of the number 2 selling vehicle. The prices inevitably have to come down as they produce more vehicles. As more electric vehicles enter the market, they are saturating the EV space for sure, but their direct competition is not with EV. It's with the internal combustion engine or the hybrid that is outselling EVs 4-to-1. Opening up the total addressable market is the only way to carve into that internal combustion engine / hybrid vast market share. Hybrids are the stepping stone. As more and more people purchase hybrids, that for me is a bullish catalyst that their next vehicle will indeed be an electric vehicle. And as the dust settles with all of these electric vehicles that are flooding the market from both legacy auto manufacturers and startups, the cream will inevitably rise to the top.
You know, I would not want to be Elon Musk. I mean, obviously he's not missing a meal, but he's down $40 billion in stock. Tesla was down 12% today. They continue to drop their price.
Down 12%? I know there's a time delay, but I don't think they were ever down 12% in a single day. Hell, they're up for the week. You wouldn't want to be Elon. You wish you could lose $40 billion in a year. I know I do.
You know, Dan Ives of Web Business Securities came out and said code red on Tesla. You know, they're in a bad spot, and the whole EV market's in a bad spot.
I want to start off, we got to start off with the bear case, I think. Craig, you're one of the most bearish on the street. Your price target's about half what the street's looking for. Is that just based on a slowdown of sales, Chinese competition, or is there something else in there?
You know what? We see as Tesla is fundamentally overvalued, egregiously overvalued. They don't really have anything that Toyota doesn't.
This line of thinking, coupled with the demand issue for EVs, this is why there is so much volatility in TSLA. What is the company truly worth? They don't have anything that Toyota doesn't have, except an energy division, FSD, Optimus, actual positive margins from making battery electric vehicles. Yeah, they don't have anything that Toyota doesn't have, right?
Why would they trade at such a massive premium? You know, you look at a company that's traded like a growth company, but there is no growth here in the first quarter. We're going to see continued price cuts, you know, over the course of this year. I think, you know, this little price increase for April 1st is a little bit of gaming, trying to juice the numbers in what's going to be a very weak quarter. And I think consumers out there expect price cuts later on this year. So you're going to see, you know, more negative momentum in the stock, and that's the most important thing. Retail props this up, and I think retail's going to keep coming out and drive the stock down.
All right, so you are very bearish. We're going to go to the complete other side. Tom, you're pretty bullish. Your price target's about 50% higher than the street. So you believe that people may be overblowing the growth concerns, even with China down quarter over quarter, Europe also down quarter over quarter. We don't talk often about that story. But you say the lofty valuation of Tesla, 60 times forward earnings, that has nothing to do with EVs in your mind.
Yeah, that's right. And actually, I agree with what your speaker was saying just now with what's happening in the quarter. I think everybody knew Q1 was going to be weak. There was a big pull forward of demand into Q4 because of the IRA expiry. There was also the Red Sea impact on Europe in February this year. We've known that things were slowing down. Model 3, Model Y are getting saturated. The newer model isn't coming until 2025. This is a company you need to look at in tectonic terms. And in any event, this is not Toyota. It's not a car business.
Get 'em!
It's an autonomy business, and it's an energy storage business. I'd love to hear what your speaker thinks of the valuation of energy storage, going from 100 gigawatt hours to 2 terawatt hours, 20-fold increase. Tesla has 15% market share of that business, and those margins are actually better than the auto business. I think that'll be worth more for Tesla than its car business. We haven't even talked about autonomy. Giving FSD for free for a month could be really big to catalyze growth here and get volumes reignited for Q2.
All right, so listen, you're throwing down the gauntlet. That's what we want here, Tom. We appreciate that. So, Craig, I'm going to come over to you about the storage question first, and we'll get back to full self-driving. What is your answer about the fact that he's basing the valuation, again, on autonomy and also storage?
So autonomy, robotics, and storage are the three subjects that people care about most. I'm the only analyst on the sell side, only analyst on the street that actually worked in the battery industry, worked in the storage industry. I'll tell you, margins there are razor thin. I work with a number of companies that are very active there.
That seems like what they say about the automotive industry, that the margins are razor thin, except when we're talking about Tesla for some reason.
You know, a couple of years ago, you saw the exit of NEC, which dominated that market. You know, there's a lot of frothy bullishness. We have to be careful with the expectations. There's some good companies out there. Tesla is one of them. But, you know, you don't get to, $600 billion valuation on storage. That's just not rational. Okay. So robotics, Boston Dynamics is the winner. You know, Hyundai bought that for $1.1 billion from SoftBank. You know, maybe it's worth 10 today. It's not worth 600.
Boston Dynamics is the winner? Sure, their robot does amazing things. Imagine how much a Boston Dynamics robot would cost versus a Tesla Optimus robot. Because Tesla is thinking mass production and Boston Dynamics is thinking sports car-like performance, Optimus will be the clear winner when it comes to the labor market.
This whole AI thing, FSD, if you're going to do level 4, it's going to consume more electricity, more electrons to support the compute of that level 4 autonomy than the drivetrain.
What? What the f*** are we talking about? We're not going to elaborate on this non-starter?
I look at this and I say there's some fundamental flaws in the bull thesis, and, it's egregiously overvalued.
All right, so Tom, I think he answered a couple of your points. He also worked in the battery industry, but I want to come back to you, Tom. I know you're very bullish, but when it comes to full self-driving, haven't we seen a lot of difficulties when it comes to this? We've seen some other companies get out of that space just because of the trouble executing.
Yeah, that's right. And I just really quickly just want to say energy storage, Tesla's actually already making more profit on that business than they are on their car business. I actually went to the Lathrop facility a few weeks ago and saw it firsthand. Also met with utilities who suggest the growth there.
Translation, times, they are a-changing.
On FSD, you're right. It's really difficult to do this. That's why a lot of companies are pulling out of it.
If it was easy, everyone would do it.
FSD, I just want to correct also your speaker. It's not level 4, right? It's level 2 plus. If 80% of your driving on highways. Tesla's the only one that does automated lane changing. It does exits for you. I think a lot of the concerns have been these accidents that you see happening on small roads. That's when you and I can just take the car over. But the 80% of the driving that happens on highways, I'm telling you, this product is amazing. You guys need to try it. It is simply amazing. No other really automaker has something on the road with this many miles. And now they're going to get to try it. I do think the pricing is too high. Once they drop the pricing, attach rate goes up, you could get an autonomy multiple on that. So it's a level 2 plus offering, not level 4 just yet.
And while Tom is right, this is amazing. Everyone should actually try this just to see. I paid $12,000 for it, and when it was reduced from $15,000, I jumped on it. Right now, this thing is easily worth $12,000 for my driving comfort. In the future, this thing is going to be worth $30,000, $40,000 when you're able to turn your vehicle into a money printer when you're not using it. In conclusion, we've listened to bulls, we've listened to bears. The consensus is this is going to be a rough Q1. Hell, it's probably going to be a rough 2024, especially if you're focusing on growth and the margin story. I can't wait to come back 3-5 years from now and clip these videos here in 2024. After the next generation vehicle ramps up, after FSD sheds the beta tag, what's growth gonna look like? What's the margin story going to be? That's all I got for you today. Be easy. Peace.